Palantir Technologies. This is a company in which I criticized from the stock price because that other guy on YouTube was talking the world of it at $25, $30, $40. He said, this is the stock of the future. I sat there and said, listen, the founder is a guy I respect a lot. Peter Thiel, however you pronounce his last name. Great, brilliant man. He started PayPal. He was involved with Palantir. He was partners with Elon Musk at PayPal. However, you can overpay for a good thing. That is what I want everyone to take away from all the videos we do. There's such a thing as a great company that you can overpay for. Look at the early 2000s. Amazon was a phenomenal company with a phenomenal future. It fell from $113 a share down to $6. Why? Very simply, overvaluation. So here's Palantir, a company that I think has a great future. And I've now, because the stock has fallen 80% from its high, I'm now interested in the company. Mo, what do you think about this whole about face that I've done on Palantir, a company that still isn't generating any profit?
So I was driving through the hills and hollers of West Virginia the other day, and Paul texted me that he sold puts on Palantir, and I was absolutely shocked. So he started talking to me about it. It did seem a little bit interesting. I still think it's a little bit speculative, but with what you've said about the amount of government contracts they have, the amount of private contracts they have, which I really like, those things started making me think, okay, maybe there's something here. Maybe there's something here at that $5 to $6 range, but let's put a value on it.
Yeah, so, one of the things I did was pull up Palantir's investor relations website, and you can sit there and look at their earnings report. There's a lot of positives here, guys. Revenue growth, 26% year over year to $473 million. The U.S. revenue growth was 45% year over year, and commercial revenue growth of 46%. Because initially, this company was focused purely on government contracts. So what does Palantir do? Now, just to keep it very basic, basically, you go to Palantir and say, hey, I'm a company, we have this problem, here's our data, how do we connect the data to the solution of the problem? That is what they do. They're big data miners that can sit there and take that data and give it into specific tasks and specific objectives to get to the future. Now, I'd love to be more specific than that, and we actually took a break in this video to figure out a more specific way of saying it, but we couldn't come up with it because at the end of the day, it's going to be very specific to every company. Tim, one of our producers, said, hey, how would Eaton Corp use this? I don't know. I'm sure Eaton Corp has many objectives and they could probably use their data to solve all those objectives. That's what Palantir would come here and do. So that's what they're doing for the US government to start. And now they're doing it for other governments and other US corporations. So some of the things that I do like about Palantir that we have to talk about here, US commercial customer count increased by 250%. So one of the things that's interesting is they're decreasing their average sale size, which some people would say that's bad. I don't think that's bad. That is part of their goal. And the reason being is they're trying to get more sales in. So it's harder and harder to get the big whales out there. You've got to go for smaller and smaller sales, which I'm perfectly all right with. Mo, what do you think?
I like that. I like that they're doing that. I also like just that you said U.S. commercial. Yeah. I really like that they're kind of, I get a little apprehensive about companies that are so entrenched in government contracts. That's why my biggest apprehension was I thought they were like 80, 90% government. Now I'm seeing they're not. That makes me a lot more comfortable.
Yeah, but even if they were all government,
I mean, you have the government behind you, so
and the government needs a lot of data solutions.
Correct.
I mean, look at all the things that we're trying to solve. Medicare, Medicaid, Social Security, all these issues we have. I'm a big believer in we can use data to solve a lot of those problems. And that's what Palantir is here to do. It's been around for a long time. Now, they haven't been public for a terrible amount of time, but let's look at their data here for the 4 years we have. 600 million, 750, a billion, $1.5 billion. Steady growth.
I like that it's steady, not jumping.
Correct. Now net income.
Wow, different story.
580 loss, $1.2 billion, $500 million loss. So if you've watched our channel before, you're like, why is Paul looking at this company? Because guys, I do believe that companies that are growing, even if they're losing money, can still be worth something. The question is, when can you get to profitability, and what does that mean from every single investment is the present value of all future cash flow? Earnings is a portion of cash flow depending on what time frame. Let's actually go look at their cash flow over the last 4 years. Their free cash flow is actually positive
It's
now.
actually, yeah, I was shocked to see that.
Their full year last year, they had $320 million in free cash flow. They lost, it was getting bigger, and now, boom, free cash flow. So hopefully they're starting to turn the corner, and as they grow and grow and grow, and look at their gross margin. Look at this, guys. 78.7% gross margin. What does that mean? It means for every extra dollar they bring in, 78.7 cents of it, almost 80 cents of it is going to go to profit. Now they have overhead costs, and as they grow, those overhead costs are going to increase. But this is a big number. As an example, what's Microsoft? Microsoft's gross margin is 68.4%. 68.4. That's incredible. So when Palantir finally is well past their overhead costs and generating profit, my guess is their profit margin is going to be somewhere around Microsoft's.
Yeah.
That's the potential here. And if we have a company that loses 3, 2, 1, and then starts making profit, that's worth something to you today, even though they're losing money today. And this is part of value investing that becomes difficult. When do they become profitable?
Right.
And that's our question. They're free cash flow positive, which I haven't done any research to see if that's the case for ongoing, and this is a permanent fix. But $300 million in free cash flow last year is a huge number.
Yeah, it's a big number.
So another thing, let's look at Microsoft. This is Microsoft still. Price to sales ratio. Now, why do I look at this? When you're trying to compare businesses to each other within an industry, I like to look at price to sales because their margins are probably going to be pretty similar. But in this situation, since Palantir is not profitable yet, I need to have some sort of comparison to other companies out there. Now, do I think Microsoft's overpriced? I do. Spoiler alert, I do think they're overpriced. So it's 8.6 price to sales ratio. It's probably on the high side of where I want it to be. Let's call it 6. Let's say it's supposed to be at 6. Well, what's Palantir's current price to sales ratio?
Nearly 9.4.
9.4. But where's their growth potential versus Microsoft?
A lot more.
Okay, so let's go to analyst estimates right here. Analyst estimates on revenue growth for the next 5 years.
Wow.
25% a year.
Yeah.
Mo, can you pull up Microsoft's and tell us where Microsoft's at?
Sure.
Because remember, guys, a lot of people sit there and say value investors don't get growth. Incorrect. We absolutely understand growth. We're just not willing to overpay for growth. And that's key.
Mid-teens, 14, 15%.
Okay, that's on the high side.
That's on the high side.
So this is 10% more. Are you willing to pay more for a company that's currently selling for 10% more than Microsoft from a price to sales ratio, but has 10% more growth potential for the next 5 years and probably beyond? With a higher margin, by the way, gross margin. That's why I'm liking Palantir. In full disclosure, Palantir is currently at $7.97. I have puts at much lower prices than this. Not $8. I won't disclose exactly, but it is lower prices than this. So that way the price to sales ratio has come down. So look at the analyst estimates on profit. Analysts, there are 17 analysts out there. They're expecting 5 cents per share in profit this year and $1.57 in 2026. That means if you buy the stock today, if you apply call it a 18 multiple because it has growth potentials, if they hit this should be a $29 stock in 2026. Would you pay $7 or $8 today to get a $29 stock in 2026? Keep in mind, they still have to hit these levels.
Right.
It's not a guarantee, right, Mo? And we've seen it have it happen. What just happened today with Rivian?
Yeah, where Rivian just recalled all of their cars, literally all of their cars, and here we are in this situation. So,
yeah.
I mean, there is a price to pay, but a lot of it going forward is speculation. There's no doubt.
100%. This is a more speculative play.
This alone, this is our 8 pillars. Not enough data anywhere. This alone tells you speculation.
Now, Palantir has been around since 2003.
Correct.
It has been around a long time. It just went public recently. So now, let's go to the stock analyzer tool. And the reason being is, this is going to allow me to make my assumptions about the future. And if analysts are expecting them to be profitable this year, we can sit there and do a blend of profitability for the next 10 years based on the growth levels and based on what they've hit in the past and based on looking at Microsoft. Keep in mind, this is a very speculative play. There's so many unknowns. So I need a larger margin of safety.
Yeah.
And I'm going to do that right here in my desired annual return. The higher my assumptions, low, middle, high, the higher my assumptions, the bigger return. Now, for a company like Microsoft, I might do 12, 13, 14%.
Yep.
For Palantir, I want a much bigger margin of error. I need that margin of safety because Palantir is not nearly as safe as Microsoft is. Microsoft ain't going away. If you told me 10 years from now Palantir was gone, I wouldn't be floored. I wouldn't be like, oh my God. I'd be like, okay, it didn't work out. Mm-hmm. If you told me 10 years from now Microsoft was gone, I'd say, what the hell is going on in this world?
The world is in shambles.
I would really be wondering what happened in the world that Microsoft was gone. Okay. So let's do our 10-year analysis. Now, As we saw, revenue growth was 25% a year according to analysts for the next 5 years. So I'm going to go a little bit lower for 10 years, and I'm going to go high side 22%. Middle, I'm going to go 17, low side 12. So and I think 12% super low, but I'm just trying to be conservative to start from there.
Yeah, let's see where the numbers spit out.
Now, profit margin.
Oh, boy.
Yeah, oh boy, because we don't have enough data here.
Yep.
So, and as they ramp up, they're going to spend more and more money. So I'm going to go with 10, 20, and 30% on the high side, okay? Because I think 10 years from now, it's possible. But they're not going to have 30% now, so you have to be a little bit more cautious to begin with early on. Okay. Free cash flow margin, I'm actually going to do the exact same thing. Now, I will say one thing. Look at free cash flow last year. 15% of their revenue. It's only 1 year.
Yeah.
But that's pretty awesome.
That's pretty good.
That's showing pretty high potential for the company.
Out of everything I've looked at on this company, the free cash flow is the surprise to me so far.
Yeah, free cash flow has been awesome. Now, PE. If it does, remember, we have PE. You want to factor your PE based on growth potential and based on ROIC and its moat. If Palantir makes it, I think this is going to be a very solid company and they're going to own that market potentially. Tom Nash was not wrong about this company could be the leading company of their industry in the future. What he was wrong about was valuation, okay? Here now, I'm looking at this going, okay, if they do hit these high numbers of 22%, who's going to compete with them? Peter Thiel is an incredibly smart individual, and I'm a big believer in him. By the way, he also loves cryptocurrency and Bitcoin. I was reading his book, 0 to 1. He talks about in the book, and I think he wrote the book in 2011 or 12. He talked about a digital currency to replace actual US currency, which is kind of interesting. Mm-hmm. But so for PE here, I'm throwing from the hip. I'm going to go 14, 18, and 22. 14, 18, and 22. Now for my desired annual return. Mo, you tell me what you're thinking. I'll tell you what I'm thinking. Don't look yet, but I'm going to write down what I'm thinking. Don't look.
Okay. I'm going to go 20, 25, and 20, 25, and 30.
Oh, wow. That's higher than mine.
Yeah.
Mine was 15, 20, and 25.
Oh, wow. 15, really?
Because I think these low assumptions are very low.
So I do think they're low, but I guess the whole speculative nature of the entire play makes me jack it up a little bit.
Split the difference?
Sure.
17.5, 22.5, and 27.5. Hit the analyze button. Now remember, guys, whatever happens here, if it's all green, it doesn't mean go out and buy. I don't know if these numbers are reasonable. We have analyst expectations. Analysts also think that NEO is going to be a $400 billion company in revenue in the next 5 years, which I don't believe at all. It could happen.
Rivion's doing $88 billion.
And Rivion's going to do $90 billion in revenue in the next 5 years. We don't necessarily believe that. However, for a smaller company like this, I'm hoping they're more intimately involved with the company and can understand it better. So, stock price is currently 8.
I haven't looked.
150, 320, and 560.
Okay.
Now, I do think we were very high on the desired annual return. And I do think that the profit margin, if they get to that profitability, will be much higher than 10 or 20%. But now, as you can see, it's getting much closer to the price that we believed. So in past videos, I have shown that I believe Palantir is interesting at $5, but we don't know the future and it's still losing money. Even though it's turned some corners and has a lot of momentum behind it, we still don't know the future, and that's why we're putting a higher margin in. But as you can see, our high price of $560 is getting pretty close to where we want to be. So from here, it's especially important for you as an investor to understand the 3 aspects that make a successful investor: mentality, emotion, and process. Watch our next video where we talk about these 3 aspects that make a successful investor. Thank you very much for your time. There are 3 things that you absolutely need in order to be a successful investor: the proper mindset, the proper emotion, and the proper process. Which ones are the most important?